Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's take a look at what happened as far as the global markets are concerned. Very strong close for the US markets. The US markets ended up much higher. If you're looking at the gains up anywhere between 1 to 2%, so that was strong traction. Europe was slightly mixed in trade. Asia has started strong. You could see the move that's come in on the Nikkei. It's up 2%, it's up 1%. The Hong Kong markets are up over 2.5%. And pull up the SGX Nifty, and you can see that we will open in close to the 10,500 mark in trade. Now, as far as the ADRs are concerned, look at the gains that came in Vedanta. Vedanta was up almost 5% in trade. Tata Motors, ICICI Bank and Wipro were the other counters which managed to gain. On the losing end, you had counters like Infosys and Dr. Reddy's, which were trading weak. Now, yesterday, because of the move that we saw in the IT space, the Nifty was down in trade, but there was enough traction on the mid-cap and the small-cap end of the market. Pull up the PSU Bank, the Nifty Bank, and because of the private sector banks moving, the Nifty Bank was up almost 170 points, and the PSU Banking Index was up 25 points. As far as some of the sectors are concerned, major gains were seen on the real estate front, but because of how the rupee has panned out in trade, the Nifty IT was down almost 2%. Pull up what the fund flows did. FIs were net buyers to the tune of 350 crores. DIs were net sellers to the tune of 509 crores. Now, if you're looking at what happened with the Nifty was down 6 points. Basically, the IT companies, you had Infosys, HCL Tech, and Reliance contributed negatively to the Nifty, while positive cues coming in from L&T post the numbers and from the private sector banks. On the Nifty futures front, the open interest was down marginally. The Nifty was absolutely flat in trade. And as far as the Nifty Bank is concerned, the open interest was down 7%, indicating that there was short covering that was seen on the index. Now, 10,200 remains the big support level for the market. That's the first support, and then 10,000. What we've seen is that call writers are active from 10,300 to higher level. Today, call writers will be forced to shed positions in open interest, and put writers will start writing. Yesterday in trade, since the market was flat, most of the open interest concentration was in and around the 10,400 mark in trade. But with the SGX Nifty indicating that we will open close to the 10,500 mark in trade, call writers will be forced to shed positions at the 10,400 mark. Now, individually, there are no stocks in the F&O band, but the Nifty PCR managed to come pretty much stay at the same level. The Nifty Bank PCR moved up much higher to 1.42 from 1.27. A couple of stocks that you want to highlight. First of all, in terms of open interest gainer, IGL had news of its own in terms of the city gas distribution issue in Gurgaon. So there is fresh buying that was seen. Coal India is seeing fresh shorts. Apart from it, fresh buying was seen in Shree Cement, while Exide and Volta saw fresh shorts on high open interest build up of 11%. On the short covering side, the SRF was the one. SRF, Syndicate Bank, and SRF came out with numbers after market hours which were strong. So probably the short covering will continue. Syndicate Bank, Repco Home Finance, and Tata Elxsi, all of them saw short covering that came in. Allahabad Bank was the only counter which saw long unwinding that came in. So these are all the domestic cues for all the top international headlines. Let's go across to Paul Allen.
Sterling continued to strengthen despite British and EU officials playing down reports that a deal has been reached for financial services after Brexit. Michel Barnier tweeted that Brussels is merely ready to have close talks and dismissed claims that banks would have access to the single market after the split. UK officials also played down the issue, saying the Times report was unsubstantiated. The 1MDB scandal has landed its first direct blows on Goldman Sachs. Former senior banker Tim Lessner has pleaded guilty to US bribery and money laundering charges, and his former deputy Robert Ng has been arrested in Malaysia. Another senior Goldman banker in Asia, Andrea Valla, has been put on leave. Missing Malaysian financier Zhou Lo, the alleged mastermind of the embezzlement scheme, was charged in absentia. Saudi Arabia has quietly revised its overhaul of government and the economy, lowering some targets as Crown Prince Mohammed's ambitions meet reality. The scale-back program was posted unannounced online and doesn't affect major fiscal or energy reforms. But the lowered bar is a sign that the original plan was overly optimistic. The prince has also been weakened by the killing of Jamal Khashoggi. Indonesian investigators have begun searching the first data recorder from the crashed Lion Air jet in the hope of finding out what caused the plane to come down soon after takeoff on Monday. The 737 MAX 8 plunged into the Java Sea after the pilots asked for permission to return to Jakarta. The plane had suffered problems with altitude and speed sensors, but had been checked and cleared to fly. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Crude oil prices fell to their lowest levels in more than 6 months on signs that U.S. supply is accelerating and speculation that American sanctions on Iran will not result in zero imports. Crude oil futures in New York closed lower by about 2.5%, extending their run on the downside for a fifth consecutive day, longest losing streak since February 2018, and dipped below the 200-day moving average as OPEC crude production rose for the month of October to the highest level since 2016. All of the base metal names, they ended higher on Thursday, led by strong gains coming in for copper, zinc, nickel and lead, up anywhere between 1.5% to 2.5% each, as investors focused on the likelihood of China announcing a new set of stimulus measures. They increased further after President Donald Trump said that they had a productive conversation with the Chinese president. Gold prices, they continued from where they left off in October, posting their first monthly gain since March, as gold prices ended close to 1.5% higher on Thursday, aided by a weaker dollar.
With only few days remaining before US reimposes sanctions on Iranian oil, two of the key customers, Asian customers for Iran in Asia, India and South Korea, are believed to have agreed with the US for some kind of waivers which will allow them to continue with Iranian oil imports even after the sanctions come into place from November 5th. The broad contours have been agreed between India and US, as well as South Korea and US, and we are still trying to confirm whether Japan and China are also coming under the waivers. What we get to hear from the government officials that the final stamp has not been put on these waivers, and an announcement at all will come only after the sanctions come into place, that is midnight of November 4th and 5th. So that's some good news for the oil markets. The prices we have seen that they have been dropping from $85. It has come down significantly. So that's good news for the oil markets. The supplies will continue, and it is good news for key customers like India, which depends a lot of its crude oil imports from Iran. The other good thing is that India is supposed to have assured the US that all the money for the Iranian oil they purchase will be kept in an escrow account and won't be transferred back to Iran, so that it can be used for any other purpose. Part of the money which India would pay for buying the oil would be used in barter trade, possibly, which Iran can, like, trade in commodities and medicines. So that way the money is not going back to Iran immediately.
Well, a bunch of news that we're tracking this morning. I'm going to start off with DLF, which has reported a not so good set of numbers, at least on the operational front. Let's look at the top line growth, a 35% uptick there, 37% downtick in the operational performance of the company at a number of 500 crore as compared to 795 crore. Look at the margins, they've contracted to 30% as compared to 50% that we saw in the corresponding quarter. The profitability of the company is down 26 times to a number of 14.2 crore as compared to 375 crore. If you look at what goes behind the making of these numbers, it's the higher profit. Actually, the company has reported a higher profit despite the losses that we've seen on operational front. That's account of lower interest costs, lower depreciation, higher profit that we've seen from associates and JVs. If you look at the other development which has taken place for the company is going to be evaluating the transfer of interest held by DLF Group in certain commercial, retail, properties and land parcels to the tune of around 6,500 crore. Glasso split line consumer healthcare, that's another set of number that we're tracking this morning. Operationally, a good show. We're there, a 43% uptick there, and if you look at the top line, it's a 14% uptick there. In terms of the margins, it's a steady growth, 28% compares to 24%, and profitability of the company has also risen mainly on account of higher other income. Other development that we're tracking is Aarti Industry on back of earnings, where you have a 46% uptick there in the top line growth. And if you look at the net net profitability, that's also risen as much as 56% for this counter, despite the loss on forex contract to the tune of 42 odd crore. Tata Communication consolidated basis, well, the numbers are not so encouraging there. We've seen a revenue around 4.2%, and the company has reported a profitability as compared to a loss in the corresponding quarter on account of the exceptional loss that we've seen in the base quarter. The numbers look a little not so level on the base quarter in that matter. EBITDA margin at 15% as compared to 14%, pretty much flattish trend out there. SRF is the other set of number that we're tracking. Encouraging set of numbers. If you look at the top line performance, you're looking at a 49% growth there. And if you look at the bottom line, that's almost similar to what we've seen on the top line front. Coal India, that's not so good development there. Well, the production number, we've seen an 8% uptick there, but then in terms of sale, it seems to be a muted month for the company. In terms of the other companies that we're keeping an eye out will be the Indraprastha Gas, where Supreme Court has suggested that the company to take over the supply of the natural gas in Gurgaon district from Haryana city. And also we're tracking in Deepak Nitrate this morning because the company has commenced operation from one of his acetone plant.
Well, HPCL reported a weak set of numbers. Now, if you see the revenue, EBITDA, net profit, it was a miss on all fronts. Now, the headline numbers, the revenues were largely flat at close to 67,500 crore rupees, while the EBITDA was down by nearly 34%. Margins contracted to 33.1%, while the net profit declined by nearly 37% to close to 1,100 crore rupees for the company. Now, it was a weak quarter on the back of lower than estimated sales, weaker gross refining margins, lower inventory gains, and higher than expected foreign exchange losses for the company in the second quarter of financial year 2019. Now, the inventory gains were lower by nearly 33% to close to 1,276 crore rupees in the second quarter, while the company reported a foreign exchange loss of close to 887 crore rupees in the second quarter compared to 582 crore rupees reported by the company in the first quarter. Now, if you see the gross refining margin, that is the key number for the oil refiner, now that came in at around $4.81 per barrel versus $7.15 per barrel reported by the company in the last quarter. Now, the gross refining margins were lower because of lower inventory gains in the second quarter. Now, the crude throughput, that was higher by nearly 5%, while sales volume were down nearly 6% to close to 9.14 million metric tons. Now, lastly, on the balance sheet side, if you see the company's debt, now that was higher by nearly 20% to close to 17,852 crore rupees as of the second quarter of financial year 2019.
Well, for Hindalco, we're not looking at great set of numbers coming in from the company. If you look at the operational performance first, EBITDA number that's seen down by as much as 10.3% for this company to a number of 1,250 odd crore. Look at the margins, they're expected to contract to 11% as compared to 14%, and PAT, however, is expected to be higher by 21%. Well, standalone plus Utkal EBITDA, that's a key parameter that we'll keep an eye out for the Indian business consolidation. That's seen down by as much as 4% to a number of around 1,565 odd crore. What goes behind the making of those numbers is clearly the drag that we are expected to see in the copper division, which is expected to weigh down on the earning performance of the company. Copper division EBITDA has seen down, EBITDA for that performance has seen down by 37% downtick to a number of around 3,284 crore. In terms of aluminium division, we are expecting a growth out there, 12% uptick compared to a number of 12,300 odd crore. But then the profits could have been higher had it not been for the higher cost of production and higher alumina costs that the aluminium segment is witnessing right now. Other parameters, we'll be looking out for aluminium sales volume, which is expected to be flattish year-on-year basis, but then we're expecting a 10% uptick sequentially. Copper aluminium is expected, the volumes are expected to be lower both sequentially as well as on year-on-year basis. Key issues that we like to keep an eye out will be the cost of production that the aluminium business is witnessing right now.
Lastly, the third oil marketing company would be reporting its numbers today, Indian Oil Corporation. Now, if you see the headline numbers, the revenues are expected to be higher by nearly 6% to close to 1,37,000 crore rupees, while the EBITDA is expected to be down by nearly 25%. Margins are expected to contract to 7%, while the net profit of the company is expected to fall nearly 25% to close to 5,120 crore rupees. The gross refining margin, that is the key number for the oil refiner, that is expected to come in at around $6.2 per barrel versus $10.2 per barrel reported by the company in the last quarter. Now, it is expected to be a muted quarter on the back of lower inventory gains and a weaker rupee. Now, if you remove the inventory gains, the performance are expected to be steady both in refining and in the marketing business. Now, inventory gains are expected to be lower because of a relatively lower hike in crude oil prices in the second quarter compared to first quarter. On the marketing side, if you see, steady fuel margins were seen throughout the second quarter. Now, the gross marketing margin earned by Indian Oil Corporation on sale of every litre of petrol, now that averaged around 1.6 rupees per litre versus 1.5 rupees per litre reported by the company in the last quarter, while for diesel it averaged around 2.2 rupees per litre versus 1.9 rupees per litre in the last quarter. On the production side, on the operation side, if you see, the crude throughput, that is expected to be higher by nearly 1.5% to 17.92 million metric tons, while the sales are expected to be down by nearly 4% to close to 21 million metric tons for the company. On the petchem business, now that is expected to be better due to higher volumes and margins, while the pipeline business is expected to be steady on the back of resilient margins seen in the second quarter of financial year 2019. Now, key things to watch out for from Indian Oil Corporation earnings would be the company's crude sourcing strategy amid Iran embargo and decline in Venezuela crude production. Along with this, a clarity on the company's strategy, how they're going to absorb the 1 rupee per litre hike that was imposed by the government, while the utilization levels of Paradip refinery and forex and inventory changes would be key things to watch out for from the second quarter earnings of Indian Oil Corporation.
Axis Bank will report its numbers, and the expectations are being built as pretty high post what ICICI did. As far as the NII is concerned, we are seeing a close to a 14% growth, and on the bottom line, we're seeing a 75% growth that will come in on a lower base last time around. Business momentum should continue to stay strong by lending as far as retail and the SME segment is concerned. But overall, because of the management change, the loan growth probably will be slightly muted this time around. The benefit from the NCLT cases probably won't be visible in this quarter. Slippages, that's another important thing. We're expecting close to 3,500 crores of slippages that will come in as the bank recognizes the balance sheet stressed assets. Expect the bank's sub-investment grade pool to generate slippages, and that will impact that. Movement in investment grade portfolio will be the key monitorable for them, and credit cost pretty much will remain elevated for the bank.